Hey, Chris, I need you to tell me how this RIM thing falls out, man. What's going on? I mean, you think that the people out there are going to get run scared and not buy it anymore, or just dump it? What's going on?
Well, I was looking at that myself, and the stock got smashed. I mean, it was down like 12%. It was down nearly 12% on Friday's trade, and I have to tell you, I'm kind of shocked. But this is like the shorts doing their thing. Stock was down like 11%, $7.20 in aftermarket, full all in. It's about $56.89. I've done some work on this stock, and quite frankly, Jeff, I think it's worth $70 a share.
What? $70? Where you getting that? Where are you getting those numbers?
$70 a share. I mean, I've done a lot of research on it, and I think that, if you break up the business and look at what each division of the company that they have, what it's worth, you could come up with a decent $70 price tag. They've got BlackBerry phones, which make up about 50% of that. They've got a push email service, which makes up a little over 30% of that. They've got a Playbook tablet coming on, which makes up about 6.5% of that. Accessories and software, and about $5.10 in cash. To me,
why did it drop, man? Why did it drop? Where is everybody running scared? What is going on?
Shorts are having a field day. I mean, the stock reported slightly below estimates. Everybody's been lowering their numbers. They think it's going to go lower. And for the short term, they might be right. But for the long term, they're definitely dead wrong. I could give you 3 reasons why I think the stock is going to go higher.
3 reasons? Three? What? 3? Wait a minute. Just 3. Just 3? Just give me one. Just give me one. I'd like to know just one.
Management's experience. They consistently deliver. They have a history of executing well. And right now, they're doing a lot of things to really revamp themselves and put themselves in the forefront of being an industry, being a very formidable contender to the likes of Apple and Google.
But Chris, they're losing it, man. I mean, just like you said, Apple and Google are eating them for lunch, man. What's going to happen? I mean, going forward. I mean, why should I even think about taking a position or buying or doing whatever? I mean, it's what was it? How many? 7 points did it drop? 8 points? 10 points? What was it?
It was $7.20. All in. It'll probably go down, Jeff. It's probably going to go down even more.
So where you see it bottoming? Where's the light at the end of the tunnel?
I mean, the stock is about $56 a share right now. The way I see it, shorts are having a field day. The short guys, they put a lot of money on borrowing stock and then selling it at a high price and then buying it back at a lower price. There's a certain amount of stock that you can borrow in the shares outstanding. And RIM is right now experiencing a short squeeze. And that's why the stock is under pressure. If you look at the stock, if you look at the stock from a fundamental standpoint, about 519 million shares outstanding. The short interest is about 20 million of those shares.
Right.
65% of this stuff is held by institutions. So the stock is well followed and it's well held. But with 20 million shares short, that represents a significant downward pressure on the stock. But guess what? They have to cover. They absolutely have to cover.
Okay. All right. So the covering is something you said they're going to do. All right. So, but if I'm an investor and I'm looking at maybe taking some sort of position, what do you recommend? Should I what are the things that are happening? I mean, even if they start going down even more, should I continue to buy?
Jeff, let me just say this to you. If I said to you, I've got a coupon for the Apple iPad. It's $4.99 for the 6 gigabyte price for the 16 gigabyte model.
Right.
I'll give you 25% off. Would you buy that iPad today?
Oh yeah, most definitely.
Why would you buy the iPad? Now I'm telling you, I've got a 25% off coupon on RIM. Would you buy that today?
Oh, okay, yeah, 25% off. Yeah, I'll buy that. Yeah.
No, you're not. You're running scared like everybody else, running scared. And that's the problem with stocks. People don't run to buy shares because they don't know what their coupon is worth. And I'm telling you, based on my history with the stock, based on my analysis with the stock, that this is a 25% off discount. Stock is trading at right now 8 times this year's earnings, 9.7 times last year's earnings. Where else can you buy?
So you're talking about looking at it like a coupon, like a coupon?
Yeah, I'm giving you a 25% off coupon to buy the shares. Would you buy it? No, you're running. You're running scared like everybody else.
Well, I mean, now, okay. See, I'm in the grocery store right now. I can put a coupon on anything. I get a sale on this coupon, but I mean that's a grocery item, man. I mean, can you really put it in the same position as a stock in terms of a company like RIM? I mean, they kind of seem like they're falling behind. I mean, you see them, not being in the forefront of all this stuff that's going on right now.
I'll make it clear to you. When RIM had their BlackBerry, original BlackBerry, it was like a black and white screen. It had a keyboard. It was big. And Trio came out with a color screen. They addressed the market with a color screen with a keyboard. It was blue. Right. And it had a color screen. And they still maintained their market share. Then they came out again when Apple introduced the iPad, the iPhone. They came out with the Storm, and they still managed to maintain market share. It's not a ton, but they're still right in there. Management has stated they have a stake at executing, and they do it very well. Right. They got a product refresh going on right now, so it's giving you an opportunity to buy. They're currently upgrading the BlackBerry operating system to QNX. Okay? It's a complete overhaul of the way the BlackBerry is going to work. You're going to have your touch screen. You're going to have your interface. The OS is going to be able to run Android applications as well as Java applications. It's going to be a whole new update to the user experience. It's going to keep people involved with the BlackBerry. They'll be able to maintain their market share.
Okay, I get that. They're really trying to get back in the game. I saw that thing when it came to the Android, thing that they put together where they're going to be running Android apps. That's hot. I give them that. And I even give them the fact that they've been in enterprise for this long, and there's no way in the world that just all those who are using it in that capacity are just going to give it up. And so I give you that. I understand how that works. I'm for how the enterprise works as well. But when it comes down to that drop, man, I mean, you don't think everybody's just going to run scared and it just continue to drop and maybe get to the point of where folks can just like say, hell with it, I'm dumping it.
Yes, but they'll come back. They'll come back to the drop like pigs. Because that's what people do. And they'll recognize that management is going to execute on their strategy, both with this BlackBerry OS refresh and their new product launch is the Playbook tablet, which is coming out. It's expected to launch in 25,000 retail operations in North America and Canada on April 19th. It has all the bells and whistles. Dual-core processor, 1080p cameras, 3-megapixel front, 5-megapixel rear, GPS, accelerometer. Comes in 16, 32, and 64-bit flavors. It's got, it starts off competitively priced at $499, like all the other tablets.
Okay, and you got something there because with the BlackBerry name behind it, people can, like you said, they can trust it, especially in the enterprise. It's kind of going to be, I would say, it's going to be an automatic when it comes to the enterprise. And so, them bringing that in, along with all the other, things that I hear coming down the pipe for BlackBerry. Okay. I'd take a discount. I mean, I'd take a coupon. So, I mean, if that's the case, where would you, put the average Joe investor like me? I know you deal with those high caliber guys, but average Joe like me, what kind of position should I take?
If you got $10,000 to invest, put 25 up now.
25?
If it goes lower, $2,500.
Right.
Put $2,500 into the stock right now if you have $10,000 to invest.
Right.
If it goes a little bit lower, add a little bit more. You can buy this stuff from here I don't know. I don't know if it'll make it down to a 40 handle. But if it does, that's where I would fill up your position. If it touches in the 40s, you should own that full $10,000. But here at the 56 mark, you should start your position.
Okay. Okay.
So,
all right.
you know, I would say like from here, put 2,500 in. If it gets, you know, below 50, you know, 51, 52, you should start putting another 2,500 in. If it starts touching in the 40s, that's when you start putting your other 2,500 in. If it goes below 45, you should have full-on investment at $45 a share.
Okay. All right. Okay. Well, all right. If that's where you feel it's going to go, if you think that RIM will be back on the uptake, how much time should I give them? How much time should I give them?
Give it 12 to 18 months.
18 months. 18 months.
That's a year and a half, Jeff. This is a stock market investment. If you want go girls and dancing and drinks and free drinks, go to Vegas. But if you want to invest and grow your money over time, buy RIM.
So 18 months of time for them to regain what it is that they've lost.
They haven't lost much. I mean, I look at the numbers, and I'm very compelled. Look at the growth. 43% growth in BlackBerries in 2010. That's over 52 million units. Revenues grew to nearly $20 billion. That's 33% growth. Where else can you buy this kind of growth for less than 10 times earnings?
Okay.
You know, everybody's got the earnings growing at like 6%, 4%, 7%, 3%. I think he's the baby bull market analyst that haven't been around. These guys just got out of MBA school. They got soap behind the ears.
Okay. So those who are in the know, those who've been, you know, through it all, they should, you know, look to agree, and you recommend that position in terms of going after and buying this thing, huh?
I think you can.
Okay.
I think it's an absolute table pounding buy.
Okay. All right. Well, I mean, if you say so, if it's part of it, I'm going to hold you to it. You know, I'll look at where I am and see where I can put my little something. It may not be 10 grand, okay, but you know, if you say so, and I can actually, you know, put a little something in as it goes down, you know, maybe I'll look to see what you got 18 months from now. All right.
Look, I know you're recording me, so I'm putting my neck on the line.
Okay.
It's just that simple.
Go for it.
All right.
Give it to me. What's up?
That's it. I put my neck on the line. Buy the stock. Done.
That's it? That's it?
That's it. Buy the stock. Done. And you said 18 months. You're recording me. I gave you my facts. You know, I just told you why you should buy it. I just told you how to buy it. I just told you where and what price to buy it. And I told you where I think it's going to go.
Okay. All right. That's your neck. So 18 months time from here, and you heard it, ladies and gentlemen. You heard him. 18 months from now, what is it? What is today's date? Okay. Today's date is March, 26th? Yeah, 26, 2011. And 18 months time, we're going to revisit this. We're going to come back. We're going to see where the stock is for RIM. And if it ain't higher than what it went to lower, we're going to call Chris. And we're going to get with him.
$70 a share. Now I've just made my call. Call me back 18 months from now and tell me how well you did and ask me for my next one.
Okay. All right. 18 months from now, we're gonna get with you, see where the stock is, and we're gonna go from there. All right?
Maybe even sooner at 12.
All right. Well, we'll leave it at that. We'll tell everyone, hey, this is where we need to go with what RIM is doing. We'll see what happens in 18 months. All right?
No doubt. I mean, I think really in the next 12 months you're going to see some activity, and it may be even sooner because I think the refresh cycle for all these new devices and products that are coming out are going to happen in the second half of this year. And we're only starting the second quarter.
All right. Well, you all heard it. Chris has said it. He's making that that prediction, and we'll go from there.